Yes, there are tiers for having money. Here they are. Tier 1 is cash. You can have loads of cash in your pocket, under the mattress, or stuff somewhere, but what is it doing for you? It's not making you more money, nor is it going to help your odds in getting approved for other things. Tier 2 is a checking account, which is great because everything is traceable. This can allow you to provide statements to investors or lenders. Tier 3 is a savings account, which is great because it's separate from your spending account. That way you can see how much you have for a rainy day. Tier 4 is a high yield savings account, and it's the same thing as a regular savings account, except that it will earn you more money in return. So you know you're moving up whenever you go from a regular savings account into a high yield savings account. It's just smarter. Tier 5 is a CD account. This is similar to a high yield savings account, except this money is not liquid. You actually cannot touch this money for a certain period of time, or else there will be a penalty. The rate of return on CDs will be similar typically to high yield savings accounts. Tier 6 are TFSAs, which are tax-free savings accounts. I've seen plenty of viral videos on here about tax-free savings accounts. Simply, they are what it says. They're tax-free savings accounts, such as an IRA. These you can't touch until you're a lot older though, so keep that in mind. Otherwise, you get a penalty if you withdraw some. Tier 7 is bonds, which basically you're lending to the government and the government's going to pay you back with interest. Still a safe investment, and you can get in with a pretty low amount. Tier 8 are mutual funds. This is basically like a pool of stocks that you're going to invest in, and it'll give you a return. If you're investing in mutual funds, you know you're starting to move up in the world. Tier 9 are ETFs, similar to mutual funds, but a little bit different. Tier 10 are single stocks. By this point, you're pretty diverse with your money. You have a lot saved. You have a lot in investments. You're pretty set. So now you're starting to do a little bit more riskier investments. Single stocks can be amazing, or it can be a disaster. Tier 11 are REITs, which stands for Real Estate Investment Trusts. It's basically you and other investors putting money together, and the REITs company will take that and use it to purchase real estate. Then it will rent out the real estate and use the income from renting it out to pay the different investors. This is lower on the list than you may think because there are REITs out there that are accessible to just about anybody. Tier 12 is whole life insurance. I love this, and this is great for business owners because no one can touch your whole life insurance money. No matter what lawsuit you lost or whatever you're going through, nothing, bankruptcy, nothing can touch whole life insurance. A lot of financial advisors call this the Rockefeller strategy because that's how the Rockefellers maintain their wealth throughout the generations. Tier 13 is crypto and digital assets. Although crypto is accessible to just about anybody to invest, I mean, the most brokest person in your contacts might even have some crypto. But there are very serious levels of crypto investing that you can get into. Plus, you really will only want to invest if you have enough that you can lose and it won't break the bank. Now, tier 14 is private banking. Now we're going into the upper echelon of wealth. Private banking is like Chase Private Client, Bank of America Private Bank, and Goldman Sachs Private Banking. There are some others, but these are basically high-end checking and savings accounts. You know how the minimum daily balance in your checking needs to be like $500? Well, with these type of accounts, it needs to be like $150,000 or $10 million as the minimum, depending on which private banking account you have. Just imagine, to open up your new checking account, you need at least $10 million in there. Tier 15 is private credit investing. This is where you would go to companies, for example, let's say they were on the verge of bankruptcy, but they had some valuable goods and services. You provided them with a line of credit or some type of funding, and they paid you back on certain terms. And these are not public companies. Tier 16 is art and collectibles. Now, I'm not talking about you went and bought a $100 painting from your friend. I'm talking about some heavy duty art, like you bought the Mona Lisa, which is worth over $850 million. This would just give me anxiety. Like, what if like some kid accidentally broke it? But there's a lot of money in art and collectibles. Tier 17 are hedge funds. This really could be higher on the list depending on how specific it will be, but there are some hedge funds that are a little bit more accessible. And if you want to learn about hedge funds, basically go watch the GameStop movie. Tier 18 is specialized real estate. This is the type of stuff like Donald Trump invests in. Heavy duty real estate investing. Tier 19 is direct investment in private deals. Now, the difference between this and private credit investing is with this, you're going to have more equity, which means that part of your return will be based on how well that company is doing. Tier 20 is private equity, also known as PE. Now, I'm not talking about recess because this is big dog money. Private equity buys, acquires, and invests in companies that are not on the stock market. They will help the company grow in profits and eventually sell the company for a high price. And Tier 21, the highest end of them all, is venture capital, also known as VC. If you're a venture capitalist, you have to have mega money because you are willing to invest into an idea. Now, some venture capitalists you might be familiar with is the people on the show Shark Tank. So think Mark Cuban, Daymond John, and those guys. Listen, I really hope you guys enjoyed this video. To learn more, make sure you give me a follow. And if you, for whatever reason, have amassed too much credit card debt and you're looking to consolidate into one monthly payment and reduce your monthly payment, go to the link in my bio and fill out the form today. See you in the next video.